25% of advisors have been asked in the last month about crypto. So at least 1 in 4 just this month has been asked, hey, why aren't you buying me crypto? I hear there are these things coming out. So all of that conspires to, let's just do simple math. Let's say it's 10 basis points. It's a reasonable expectation. Just dip your toe in 10 basis points. That's $30 billion on an asset that trades $8 billion a day. Now, to Michael's point, if BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow, price can jump a lot.
The past 40 hours have been truly unforgettable and historic for Bitcoin and the overall digital assets industry. On Wednesday, after over a decade of persistent denials and more recently, months of back and forth with applicants, the U.S. Securities and Exchange Commission finally approved 11 spot Bitcoin exchange-traded funds. The 11 successful applicants are Grayscale, BlackRock, Fidelity, Franklin Templeton, Bitwise, Hashdex, Valkyrie, ARK Invest, Invesco Galaxy, VanEck, WisdomTree. In the document announcing the long-awaited approvals, the SEC stated, after careful review, the Commission finds that the proposals are consistent with the Exchange Act and rules and regulations thereunder applicable to a national securities exchange. The documents further noted that fraud or manipulation that would impact prices in spot Bitcoin markets would likely impact Bitcoin futures prices in similar ways. This is a direct reference to the judge's ruling in Grayscale's lawsuit against the SEC when the Commission first denied the conversion of the Grayscale Bitcoin Trust into a spot Bitcoin ETF. The judge had ruled that the Commission had no reason to deny spot Bitcoin ETF on the grounds of fraud and market manipulation when it had already approved Bitcoin futures ETFs, which easily faced the same risks. The grudgingly given approvals notwithstanding, all 11 Bitcoin ETFs are now live. Altogether, they recorded billions of dollars in trading volume in the first few hours of launch. According to Mark Yusko, a renowned hedge fund manager, crypto enthusiast, and founder of Morgan Creek Capital Investments, this is only the beginning of the many huge feats to come. Yusko believes we can easily go from billions in trading volume to hundreds of billions of dollars, possibly before the bull market ends. We will now bring you clips from Mark Yusko's latest interview with Blockworks Macro. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. Also, ensure you drop your comments and observations in the comments section below. Thanks and enjoy the video.
Advisors, Merrill Lynch, UBS, etc., Schwab, Independence, control about $30 trillion.
Yeah.
Okay, it's a big number. And the average advisor today has sub 3% exposure to cryptocurrencies. And the vast majority of that is in companies like MicroStrategy, et cetera, that own it. 91% of advisors say their most important asset for managing client assets are ETFs, not mutual funds. That's 20 years ago. Not single stocks and bonds. That's 30 years ago. It is ETFs. And so when you combine an underweight, a massive underweight to digital assets, whereas, the vast majority of that $30 trillion has zero exposure. Let's just do simple math. Let's say it's 10 basis points. Okay, it's a reasonable expectation. Just dip your toe in 10 basis points. That's $30 billion on an asset that trades $8 billion a day. Now, to Michael's point, if BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow, price can jump a lot. We can't take I actually think $3.5 billion is going to trade tomorrow. That's been my number for a while. At day one, $3.5 billion will come in. That's a problem. So, a good problem. But the reality is it's not going to be 10 basis points. Let's say it's 100 basis points, 1%, which is not a crazy number. Now you're talking 300 billion, not tomorrow, but over some period of time. Again, to Michael's point, it'll take some time to educate and have some fancy ads and all that good stuff. Once UBS and Merrill put it in the model portfolio, it's over. You don't have a choice as an advisor to not have it. right? As a fiduciary, as a member of the team, you have to do that. Now, there's no, in the old days, it used to be you had to buy the one that they got paid the most by. So a little kickback going on. And that may still happen. But now you got 11 choices. And there's going to be money that's going to go into these things, and it's going to be big. Here's a crazy stat. BITO raised $1 billion on day one. 950 million, call it $1 billion. Today has $2 billion. Despite the fact that they're down 31% since inception. And they were down 75, but they came back a little. But so think about, that's a crappy structure, right? It's got negative roll yield, all the it's a crappy structure, bad performance, and yet it still attracted more than $2 billion because the billion turned into 300 million, and then they raised another probably billion, and that then doubled. I guess they raised about 700 million, and that doubled to 2 billion.
So far, the launch of the approved Bitcoin exchange-traded products has been quite successful. According to reports, all 11 ETFs hit a record trading volume of $1.2 billion in the first 30 minutes after launch, and almost $2 billion within the hour. According to a post shared on X by Bloomberg analyst James Seifert on Thursday, Grayscale led the train with $446 million, followed by BlackRock with $388 million, Fidelity with $230 million, and ARK Invest with $82 million, all in the first 30 minutes of trading. James's post reads, Spot Bitcoin ETFs crossed $1.2 billion in trading volume in the first 30 minutes of trading. VanEck got a later start than the others, but Grayscale and BlackRock are hot out of the gate. No way to know how much of this is flows, though I would bet a significant portion of it is indeed flows. Would also bet that a lot of the GBTC trading volume is outflows. About 6 hours later, James had another important update about the first-day trading volumes for the newly approved spot, Bitcoin ETFs and GBTC. The post reads, Here's the Bitcoin ETF Cointucky Derby data via trading volume on day one. More volume will continue for a little while. Total volume was over $4.6 billion, with GBTC having about half of it. BlackRock and Fidelity went 1 and 2 absent GBTC. According to the image accompanying the post, BlackRock had a trading volume of over $1 billion, followed by Fidelity with $712 million, ARK Invest with $288, and Bitwise with $125 million. At the time, GBTC had recorded a trading volume of $2.3 billion, making a total of $4.6 billion in trading volume for the whole pack and $2.3 billion when you exclude GBTC. It's no wonder James both described this feat as record-shattering. Let's get back to Mark Yusko's interview as he speaks further about the SEC and other stumbling blocks.
Look, we had two flushes. Two serious liquidity flushes in the past week. One on the matrix port, and then the second on the oops, put in the wrong day for the tweet, or whatever it was. I don't really care, but actually I do care because I actually think it was intentional. I actually think it was a trial run for what's going to happen tomorrow, which that's the sinister part that scares me. I actually think it was a trial run for the short side. Well, absolutely, the SEC looks idiotic, right? You can't even protect your own social media account. And the thing that's so funny is when they tried to make it about crypto, say, look, the crypto market is manipulated. Like, really? If you did that same thing with Microsoft or Nvidia or any other public company, the same damn thing would have happened. Don't say that was a crypto thing. That was a Wall Street thing. This was like when FTX went down and they're like, it's a crypto problem. I'm like, no, that's a bad person doing bad things problem. That had nothing to do with crypto. That's what, the guys in the SNL crisis did. That's what the guys in the junk bond crisis did. Bad people do bad things. So I think crypto, they try to make us look bad all the time. Ultimately, the reason the media, which is controlled by the same people that control finance, are going to paint this industry negatively at every chance is blockchain technology and crypto, Bitcoin, et cetera, does to financial services what the internet did to media and commerce. Full stop. And there's no way to stop it, right? We've talked about this ad nauseum on Saturdays, is banks had an 838-year run. It's over. Now, it won't end tomorrow, but the 838-year monopoly on trust, it's over. I mean, it's over. And so as we do the X, right, as we go from one monopoly to another monopoly, which is sound real money, which can be cool in the future, that path is going to be rocky and it's going to be dotted and littered with these attacks. But clearly, the SEC, I mean, they literally look like a clown show. Bitcoin in and of itself, it's this amazing thing. But if its only function is to sit on a ledger and bury it in the backyard, we can all just go home and go back to our old jobs, because that we already got that. That's gold. And gold won't, decay buried in the backyard like a ledger might. So that isn't what this is all about, right? What this is all about is establishing the base layer of money, replacing gold as the base layer of money in every financial institution in the world, every central bank, every, centralized organization and decentralized organization. But the migration from centralized to decentralized is not going to happen immediately. But every time we introduce new companies to facilitate new technology, that's what I love as a venture capitalist, is there are people building these solutions to help cross the chasm, right? Because if you're a bank, and you're saying, well, Jesus, I don't really like this, the fact that I'm not necessary now. Michael can lend money to Michael without me. That's not good for me. Okay, well, how do I get in the middle of this? Okay, maybe I can be a custodian. Maybe I can be a record keeper. Maybe, they're going to be functions. And at least in the short term, there's going to be some role for fiat.
Meanwhile, Thursday did not go without an unpleasant event for Bitcoin. After trading started, users with brokerage accounts at Vanguard quickly noticed they could not get any of the action. A customer representative of the firm later said Bitcoin ETFs were not available on the platform because they were highly speculative, unregulated, and didn't fit with the company's long-term investing philosophy. The representative noted that the platform didn't allow other kinds of investments, such as leveraged ETFs. We also have no plans to offer Vanguard Bitcoin ETFs or other crypto-related products, the representative said on Thursday. Our perspective is long-standing that cryptocurrencies' high volatility runs counter to our goal of helping investors generate positive real returns over the long term. Clients who tried to buy a share of BlackRock's IBIT Bitcoin ETF were told the trade could not be completed, with the website stating that securities may be unavailable for purchase at Vanguard due to a number of variables, including regulatory restrictions, corporate actions, or various trading and/or settlement limitations. People also quickly noticed a caveat on JP Morgan's interface when they tried to buy BlackRock's IBIT Bitcoin ETF. The warning reads, cryptocurrency-linked instruments present unique risks and may experience high volatility. Overall, it was not a bad start to such a historic moment, despite the machinations to keep it from happening or going smoothly. What are your thoughts on Mark Yusko's interview and predictions for Bitcoin and the entire digital asset space? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.